Today's video is going to be covering the 4-hour power of 3 and how you want to be a part of a move whenever we have an open high low close or an open low high close on the 4-hour time frame, and aligning that with a lower time frame swing point. If you guys want to join the YouTube memberships and get all the perks of that, you can check it out on my YouTube page. Other than that, let's hop right into the 4-hour power of 3. Now right here to the left we have the 4-hour time frame, and over here to the right we can align this with the 1-hour or 30-minute time frame. Now in this example, this is when you are not going to wait for a new swing point to be created on the 1-hour or 30-minute chart. And that's because we are opening up a C3 on the 4-hour time frame as well as the 1-hour or 30-minute time frame. And usually if we are creating a 30-minute C3, we're always going to be creating that 1-hour C3 as well, because obviously the 30-minute is a lower time frame than the 1-hour. So whenever the 30 minutes opening a C3 at a high or low of a range, so is the 1-hour. So this is whenever you're going to look inside of the C3 on the lower time frame chart on the 1-hour or 30-minute. And then you're going to look for this wick to be created inside of a gap or sweeping out a lower time frame high or low to be a part of that expansion higher. So whenever we're opening up a 4-hour C3 as well as a 1-hour or 30-minute C3, that is whenever you're not going to wait for a new swing point to be created, because at this point whenever we open up a C3 across all time frames, we are now expecting all time frames to be in sync for an expansion to the upside or the downside. So over here to the left we can see that we have this C1 candle, and the C2 candle creates a swing point taking out the C1's low and closing back inside the range. We can see that happening down here on the lower time frame chart to the right of us. That's creating a swing point on the lower time frames, and then we are opening up a new 4-hour candle as well as a 1-hour or 30-minute candle, and we are looking to catch the expansion to the upside for C3 continuation. So we're going to look to be a part of a 4-hour expansion candle as well as a 1-hour or 30-minute expansion candle, since they are all opening up inside of a C3 candle. So to give you guys an explanation on this and what I mean by that, we're going to take a look at gold right here, and you guys can see that we have this daily fair value gap lying right here, and we want to see if we can trade this to the previous day low. So we're going to want to see an open high, lower close. So we want to see this gap get tagged into and then trade to this low down here. So if we head down to the 4-hour chart, you guys can see that we have just this consolidation and we have these failure swings above. So if we head down to the 30-minute time frame to see what happens whenever we engage with this high up here, let's play this out. And you guys can see right here, whenever we tag this high, we close this C2 candle. So let's head back out to the 4-hour chart. You guys can see this is 6 a.m. and all assets are going to be opening up a C3 candle. So let's mark this out, and we can see on the 30-minute time frame that this candle is closing and 10 a.m. is about to open. So that is a new 4-hour candle, that is a new 1-hour candle, and that is a new 30-minute candle. So all assets in this case are opening up inside of a C3 candle, and this is where you don't wait for a new swing point creation on the 30-minute or 1-hour time frame. You are going to engage with this market whenever this 10 a.m. candle opens, creates its wick, and then gets a CISD to trade this to the previous day low. Right, so all assets are trading into a C3 candle. Now if we play this out, you guys can see that we get that delivery straight down without creating a new swing point on the 30-minute time frame. And if we zoom back out to the 1-hour, you guys can see the 10 a.m. candle was opening up a C3 candle on the 1-hour, the 4-hour as well, C3 continuation, and the 30-minute time frame, and we get that distribution straight to this low. So whenever we're opening up a C3 candle across all these time frames, that's whenever you can get the highest probability expansions, and you are not going to be waiting for a new swing point to be created, because sometimes you won't even get one until we meet that draw on liquidity. To trade a C2 candle, you need that Kraken correlation. So if we have an SMT at a key level or a previous candle SMT, you can trade this C2 at the lows. However, if you miss the C2 down here on the 4-hour or the lower time frame, the 1-hour or 30-minute, then you're just going to wait for C3 continuation. So we want to see C3 open up, create its wick inside of a key level on the lower time frames on the 5-minute or 3-minute, and then get those continuation order blocks to trade this higher. So you're going to mark out the invalidation from the high to the low. You'll get the 50% around here we want to see the wick be created in the upper portion of that so it can also go into an expansion. So we have our C1 candle, our C2, we have the reversal formed here within the C2 candle, so we can look for continuation on the lower time frame charts within C3. Now whenever we get to C4, that's getting pretty late into the 4-hour candle. I would not recommend trading this C4 candle, and that is because we could open up a new 4-hour and create a wick within this gap, or so on and so forth. So I would just wait and see what happens whenever we open up that new 4-hour candle. I would not try to align a continuation on the lower time frames within this C4, right? So that is how you can trade a 4-hour C2 candle. We want to see an open low, higher close, and get a part of this move within the body around here to catch the expansion higher. Now moving on, this is what I mean whenever we are opening up that 4-hour C3 after that 4-hour C2 expansion right here, right? So you guys can see this goes into a reversal, into an expansion, and that is caught right there. So we have the open of that C2 candle creating the swing right here, and that is still tradable as long as we have a cracking correlation. Now you could trade this C3 on the 1-hour or 30-minute time frame, but once again, I would not recommend trading that C4 candle if we are getting close to the new 4-hour open, because the new 4-hour open could do this. So if we open this 4-hour candle right here, it could open low, creating its wick in the upper portion of this C2 candle, and the invalidation is right here. So we want to see it be formed in the upper portion up here. So where is a key level within that? It is this 1-hour or 30-minute gap right here. So the new 4-hour opens low, creating that 1-hour or 30-minute swing and creating the wick of the 4-hour candle to go into an expansion phase of price. So right here, whenever we open low, you can trade this candle right here, which is a C2 on the 1-hour or 30-minute, as long as we have a cracking correlation. However, if we do not, just wait for that C3 to open, create its wick in a key level on the lower time frame chart, and then wait for a closure above down close candles to get a part of this expansion move higher. So right here, whenever we are opening up a new 4-hour candle, just wait for that 1-hour or 30-minute to create its wick and then catch the expansion to the highs. So if you guys are confused about what I mean right here, you guys can see that right here at 9 a.m. we create this swing point and we have reached this draw on liquidity being this low and this low right here. So what can happen after a large expansion? A consolidation. So let's say that you want to trade C3 continuation here at 10 a.m. Let's check out what happens. You guys can see that we open up this 1-hour gap. So if you try to trade C3 continuation here, you're basically stuck in a consolidation because we hit this relevant level. So let's play this out and you guys will see what I mean. As you guys can see, we come into this 1-hour gap, creating that higher time frame wick on the 4-hour chart. So if we play this out, you guys can see we purge this high once again, and this is where we get the continuation lower. So right there, we create that new higher time frame 4-hour wick inside of this 10 a.m. gap. So if you tried to trade a 1-hour C3 continuation here, you would have been stopped out at 11 a.m. and then at 12 p.m. we create that new high of the 4-hour wick to get the continuation to the downside. So whenever we are opening up a gap and we are still in a C3 like this right here, you want to wait for that higher time frame gap to be engaged to create the continuation, especially if we have reached a relevant key level like this low right here. Now this is how you are going to align these candles together. We have a 4-hour expansion candle with a small wick, and we want to be a part of the expansion move to the upside. We want to go down to our 1-hour or 30-minute time frame to find a swing point within that 4-hour expansion candle. Right, so you can either trade this C2 candle since we have a cracking correlation right here, right? So the new 4-hour candle opens right here and it opens low and gets the expansion away from the lows with that cracking correlation, so we can trade this on the lower time frame chart. But if you miss the move from down here with this cracking correlation, you can look for a C3 continuation. We mark out the invalidation point. We want to see the wick be created in a lower time frame point of interest and then catch the expansion away from the low. So aligning that with a 5 or 3 minute time frame, given whatever time frame you're using in the middle, you want to align that with the 5 or 3 minute time frame. So right here we create that low on the 4-hour and 1-hour 30-minute time frame. We have the cracking correlation at the lows. We have that V-shaped reversal higher, closing above these down close candles, that's where you could look to take your entry signature. However, if we wait for that new candle open, which opens right here, that new candle opens right there, and then we get a move lower, creating the wick of that 1 hour or 30-minute time frame, and this is where we look to capitalize on that. We have a move into a point of interest, which is this fair value gap right here. We have that V-shaped reversal away from it, closing above the down close candle that traded into this fair value gap, and that's where you could look to take your entry signature for a 1 hour or 30-minute C3 continuation higher within this 4-hour expansion candle. So you can have multiple entries if you just wait for price to do what you need it to do. The first entry comes down here with this 1 hour or 30-minute swing point with the cracking correlation and the C2 reversal. We look to capitalize on it with the V-shaped CISD. However, if you miss that, you just wait for C3 to open, and it opens low inside of the invalidation point, which is inside of this fair value gap, and it V-shapes away from it, closing through this down close, and that's where we look to capitalize on it. So there are multiple entry signatures inside the either reversal or the continuation. Either one is fine with me. I will take whichever one is the most high probable and the one that I like these signatures the most. So let's hop into the charts and I will show you guys examples of how to catch a 4-hour expansion candle with an aligned 1 hour or 30-minute swing, and then our CISDs. So here we are in our first example in the NASDAQ, and you can see this 2 a.m. candle does look like it's reversing away from this high. So let's head down to the 1 hour chart to see if we can align a swing point with that. All right, so let's go to the 1 hour, and you guys can see the relevant level is engaged, but we're not putting in a reversal candle here. We're putting in a consolidation candle. So we're going to want to require a resweep of this high for the new 6 a.m. candle and then get the reversal down to these relative equal lows. All right, so let's play this next candle out. And you guys can see we make our way up here, and let's play the next candle out. Now you can see that this high is being engaged, right? So we have a SMT at this relevant key level as well. So let's zoom over to the ES, and you can see right here is that relevant key level, and it has an SMT at the high. So we do have an SMT within this 4-hour candle that looks like this. We take out this high on the NQ, but on the ES we did not, and now we can trade this as a C2 reversal candle since we have engaged a relevant key level. So let's head down to the 1 hour chart. Now that we have put in this reversal candle, we want to look for a C3 continuation. So let's play this next candle out. You guys can see right here, we make this wick and we get the expansion lower. So let's head over to the ES. You guys can see right here, we take out this candle high, and now we have aligned a swing point and an SMT within that. So we have an SMT like this at the candle high. We are looking for a C2 reversal candle on the NQ right here to expand to these equal lows down here, right? Right here are the equal lows. We want to see these be swept out for the range high to range low. So we have a C3 candle right here on the NQ with an SMT at the highs. We are in a 4-hour C2 candle. So let's head down to the 30-minute. What do we have here on the 30-minute? We have a gap, right? So if we want to create continuation, we can do so from this gap right here, right? So let's play this next candle out. Let's play the next candle out, and right here you guys can see that the high is being engaged. So now we are going to be opening the 10 a.m. candle within a 4-hour C3 candle and a 30-minute C3 candle. So you could have either looked to get in a position from up here on the 1-hour C3, but now that we are opening a 4-hour C3 and a 30-minute C3, now we can go down to the 3-minute chart to see if we want to expand past these lows down here. So let's head down to the 3-minute chart. We can see right here is where we engage that gap. We have a CISD right here, so this is where you could look to get into a position, or you could wait for the 30-minute C3 candle to open, and that opens right here. So now that we have a gap on the lower time frame, we want to see the 30-minute wick and the 4-hour wick create a wick inside of this gap. So let's play this out. You can see that we're inside of this gap, and if we are going to get continuation lower, we want to see a closure through these up close candles. So if we play this out, you guys can see right here we get the closure through, and now we want to get into a position to trade this lower. So let's play this out, and you guys can see we get that nice expansion to the downside, right? So all of that happened from the 4-hour chart. You could have looked to get into a position within this C2 candle after this relevant high is being engaged, and we create that 1-hour swing point. But If you do not get into that position, you want to get a part of the C3 continuation within this 4-hour candle. The 4-hour candle opens high, and we are in a 30-minute C3 candle as well. That's where this opens high, creates the wick in the 50% of the previous candle within that lower time frame gap, and gets the continuation lower for 10 a.m. continuation. Right, so once again, if you wanted to get into a position up here, right here's where we put in that SMT. Right here is where we have the SMT and the sweep of that 4-hour high. You could have gotten into a position whenever we CISD'd right here, or after we put in this SMT right here and close through this up close candle. So there is multiple entries to get on side for that 4-hour power of 3 and the 10 a.m. open high lower close. So now moving on to our next example, we are on the NQ, and you guys can see the 1800 opens and immediately expands. We put in this reversal candle right here. However, the daily wick size would be way too large to trade this back into the range. So ideally, we want to see continuation away from this 4-hour gap. Right, so we want to see 10 a.m. open high and then align a 1-hour or 30-minute swing point with this 4-hour gap. How do we trade this? Well, we need an SMT. We do get an SMT with this candle's high, so let's head down to the 1-hour chart. Right, so let's play this next candle out, and right here's where we put in that SMT, and we have this low as a draw on liquidity. So we engage this relevant key level, which is that 4-hour gap, and we are putting in a swing point with SMT at the highs. So now we are trading a 4-hour C2 candle, and if we zoom back out, do we have a small enough wick to also expand? Well, one way you could tell for that is just measuring out these candles. 318 points. We have this candle being 360 points. We have this candle being 380 points. And what is the current candle at? It is at 234, so this does have enough room to expand close to the lows, right? So this is a small enough wick to also expand lower. So now if we zoom back into the 1-hour, you can see we put in this 1-hour C2, so you could look to engage with this candle right here because we do have an SMT at the highs. So if we hop down to our 5-minute chart, right here's us sweeping out that previous candle high, putting in that SMT up here, and we have engaged a key level on the 5-minute as well, being this 5-minute high. So we have a CISD right there. So this is where you could look to engage with it once we close through. You could either mark it in, put your limits here, or do what you want. Or you can wait till 11 opens up, which occurs right here, and you can wait for the 11 a.m. candle to open high and then get the continuation lower, right? Because at this point, we are not going to be opening up a 30-minute or a 1-hour gap, so you are going to expect 11 a.m. to continue lower. So let's play this out. And it opens low. However, we leave this low down here. So now we want to see if we can get more continuation. So let's zoom back out, and you guys can see that we do take out this candle's high. Do we have an SMT there? Yes, we do. So let's see if the ES does not take this candle's high out. Let's play this candle out. We do take it out. So what do we need to wait for? We need to wait for C3 continuation. So let's play this out, and you guys can see right here we do get a sweep of a high and we have a CISD. So now one opens up right here, and what do we have? We have a gap and a closure through. So this is where you could look to take your position to trade to these lows down here. So let's play this out. You guys can see that it does get ran through, right? So once again, not every single trade is going to work out, but if you took the original CISD, it did work out, right? And then what happens here? We get a resweep of a high. What do we have then? A closure through. So even though you took a loss on this first position, there is always another entry. What is this doing? It is just creating the wick of the 1 p.m. candle. Right, so 1 p.m. opens here and it goes lower, but then it comes higher and re-sweeps these highs right here. Then you have a closure through the up close candle. That's where you could look to trade this to the lows. So let's play this out and see if we end up getting there. And you guys can see we do end up delivering. So all in all, there was a few entries within there. One of those would have been a loss, and that is totally fine. Let's zoom back out and recap this. We have a 4-hour gap. We have an SMT at this gap high. and we are trading a C2 candle. Heading down to the 1 hour, we take out this candle's high with SMT at a relevant key level, and that's where you could look to position yourself. After that, we did have a relatively large wick, and what did I say? We could trade close to this low, but I wouldn't expect it. That's why 2 p.m. opens and then takes the low. So right here, once we create this new swing point, that's where you could look to engage with this. Right, so there is a few entries within price here. We have the first entry being this CISD. We have the second entry once we have an SMT at this high and a CISD right here. Then if you wanted to get in on the continuation, you would have first taken a loss, but then you could have re-entered on this continuation there. So for our next example, here we are on gold, and we have that daily gap resting right here. So we're going to cover this trade in full. As you can see, we have this daily gap lying above, and if we head down to the 4 hour, we're just in this consolidation. So we want to see 10 a.m. ideally tag this gap and then get the continuation down here for a reversal into the continuation on the daily time frame. So now that we have the high that we want to see be engaged and then a reversal to the lows, let's head down to our 30-minute time frame. So we have the new candle opening right here, right? So we have 9:30 opening into this gap. So now we want to see 10 a.m. continue lower. We want to see this be the reversal for a 10 a.m. expansion to the lows. Now, once again, if we zoom back out to our 4 hour chart, you can see that we're opening a 10 a.m. C3 on the 4 hour, a 1 hour C3 candle as well, and a 30-minute C3 as well. This is when you are not going to wait for a new swing point to be created, because we are expecting all assets or all time frames to be in sync for an expansion to the lows. So let's head down to our 3-minute chart. Since it is very close to the open and we have opened here, we want to see the 3-minute open high and then create continuation lower. So right here you can see we do open high for the 10 a.m. candle. We close through these up close candles. This is where we could look to get into a position to trade this to the lows. So let's play this out. You can see that that does get respected, and if we are going to continue, what do we want to see? We want to see this have a closure through for continuation, since this is our CISD. Right, so let's play this out further, and you guys can see that we do end up delivering to this low down here, right? So when all assets are opening inside of a C3 candle, we are expecting all time frames to be in sync for that expansion to the lows and the overall draw on liquidity. So the 4 hour, it is opening inside of a C3. The 1 hour is opening inside of a C3. The 30-minute is opening inside of a C3. So we are expecting this to just get an expansion lower, and we really wouldn't expect this to put in any more swing points since all assets are in, since all time frames are in sync. I don't know why I keep saying all assets. All time frames are in sync to get the expansion lower. So right here we also create a 5-minute continuation after a 5-minute CISD. You could have seen this on the 3-minute or the 5-minute, it doesn't matter. All time frames were in sync to go to this low. This is when the highest probability expansions will occur. So here we are on the ES, and this is a relatively ugly reversal because we leave a failure swing at the lows. However, how do we trade away from failure swings? It's expansion away with gaps. So we have all these gaps here, so if these are going to be respected, then we just want to see a run towards this high. So if we zoom back out, you can see that we are creating a C2 at the 6 a.m. candle. If we go to the 1 hour chart, we are creating a C2 on the hourly as well. And if we go to the 30-minute, we can see that we have already created a C2 and engaged with this relevant key level. I would be more inclined to use the 5-minute just because we do have a run of this 4-hour low. We have a large wick to the downside, and if we go to the 1 hour, we have a relatively large wick as well. So we want to see a run of this high and a run of that high up here to have continuation higher. So now that we are opening inside of a C3 on the hourly and the 4 hour, we can just align a 5-minute continuation with that. So if we take a look here, we can see that we do have our original CISD right there. This is a doji candle, so this does break the pattern of the down close candles. So this is the CISD I would use. Now, if we take a look here, we have 10 a.m. opening up right here. We do have a fair value gap. So if we are going to get continuation, we want to see a closure through this down close candle. And we do have a run of this low right here once again, and a closure through this candle right here. This is where you could look to take your entry signature and trade it towards these highs up here. Right, so we want to see this high and this high up here. So let's play this out to see how we deliver. You guys can see we hit this high, we get a retracement into gaps, then we create continuation once again. Right, so we create continuation, so this is a continuation signature to reach this high up here. So let's play this out further. You guys can see that we do make equal highs, and we never end up reaching that high, right, until market closes and the next day opens. However, we get a tick within it, right? If you're not taking PT at a tick away from a draw in liquidity, that's on you, right? But you guys can see how we can align that 1 hour C3 with the 4 hour C3 to get the continuation higher and trade that 4 hour power of 3. We have an open low and then we have a higher close. So that is how you can trade this. And as you guys can see, we never actually end up reaching the high, right? So we just created equal lows, equal highs. That market was absolutely dog. But if we head over to the NQ, we can see the NQ did reach this high. So we did have an SMT there. I was just waiting till this was over to show you guys that. Right, but that's how you can trade whenever the 1 hour and the 4 hour opening inside of a C3. We want to see that wick be created, open low, and then a run higher for a higher close. But it doesn't favor the draw in liquidity, which are these failure swings above and the daily opening price, since we do have this candle close right here. And if we take a look at gold, we can see gold has an SMT at this candle's low with euro right here. Right, so euro has an SMT right there, so gold is reversing away from this SMT, so that would favor silver trading higher as well. So if we're going to continue higher, we want to see the wick be respected 50% and then continuation to these failure swings. If we head down to the 1 hour chart, you can see that we do not have a gap. Let's head down to the 30-minute chart. We do indeed have a gap. However, we do not put in a reversal candle right here, right? So there's no reversal candle, so we would expect this low to be tagged, and then we could get continuation higher. So let's put that back on. This is our invalidation, so we don't want to see price make a large run lower before continuing higher, and we do have these relative equal highs lying above, so these two are very good draws on liquidity. So let's go to the 3-minute just because I don't want the candle to play out. And now what do we see here? Well, we have these relative equal lows, so ideally the 10 a.m. candle is going to open low. Let's zoom back out to the 1 hour. Let's say you were going to try to trade this as a C4 candle, right? C2, C3, C4. You can see that we were just coming down and filling out this 30-minute gap. This is why you wait, right? This is why you wait whenever we have gaps, because most of the time when we're about to open that new 4 hour candle, the likelihood of us filling that gap for the wick of the higher time frame candle is very, very likely. So now that the new 4 hour is about to open, we want to see a sweep of this low, some form of SMT to get on side with this C2 candle on the 30-minute time frame to trade to these relative equal highs. So let's go back to the 3-minute and let's start playing this out. We can see 10 a.m. opens here. It opens low, takes out this low, and let's head over to gold. We can see gold is not taking out the low, so we do in fact have an SMT at this low. Now we want to see a closure through this down close candle to have the continuation higher. So let's play this next candle out, and you can see that we do in fact have a closure through. So this is where you could look to get on side with this candle to trade it to the high up here. So let's play this out, and you guys can see that we do end up going to the daily opening price. And let's play this a little further to see if we get to those relative equal highs. You can see that we do end up chopping our way to those relative equal highs. And if we mark out the C3 continuation for the 30-minute chart, you can see that we make this move lower, close through these up or down close candles. This is where we would expect continuation and this to remain a protected swing until we take out those equal highs up here. So just to show you guys, right here's that C3 continuation. We would expect this to remain a protected low until we meet that high up here. However, would we expect much higher than this? If we zoom out to the daily, I would not expect higher than this because of how deep of a run we have to the lows. So let's play this out. we do end up going a little further, but then we just chop around until the new day opens up. And that is how you can trade the new 4-hour candles, right? We want to see new 4-hour candles open low or open high into a key level and create that 1 hour or 30-minute swing. But if we are opening a C3 across multiple time frames, we would immediately assume that all time frames are aligned for expansion. And that is the 4-hour power of 3 video, and I hope you guys enjoyed this one. This was a good one to make, and yeah, I'm just yapping now that I finished the video. So yeah, I hope you guys enjoyed this video. I'm gonna hop out of here. I will see you guys in another video or a live stream or whatever it is. I'll see you guys in another. So yeah, peace out. Hope you guys have a good one.